Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Sheraz Mian. And we've brought you two big mega caps. Now, the small caps are rallying, so maybe you don't want to be in the mega caps, or maybe you do. Here's some good top names here. So, Sheraz, we're going to start with you because you brought the beaten down one, and
Sure.
I brought one that has rallied over the last 5 years. So you brought General Electric.
Yes, so GE is on nobody's top list of
Right.
stocks that they should consider. The stock is down 43% over the past year, down 10%. On anyone's list of the dog of this index or that index, GE tops that. And I think there's still plenty of risks that we should make folks aware of. But the big question which has been hanging over GE and which has brought the stock down is the future of its dividend and the future of its cash flow. So last year, when the business became too difficult for them to manage and the cash flows were not sufficient to meet their dividend obligations, they cut dividend.
Right, that was shocking.
That's right.
Yeah.
And from 24 to 12, a 50% cut. And ever since then, management seems to be trying to execute a turnaround, a restructuring. They had been bulking on the energy. They later on said it's not clear if it's going to be a core business or not. They shared with the market that they planned on getting out of about $20 billion worth of businesses. So a lot of uncertainty about what the future shape of GE would be and whether this team is good enough and strong enough to take folks to that promised land. My thesis is that the dividend is safe. That there's plenty of thought been put into the restructuring plan, the 25 billion in sales. They want to do sales of businesses.
Right.
So today, we have the announcement of the transportation business. They're coming out and getting $10-12 billion for that. I think as the market gains more confidence in this restructuring program, and the company getting back to its fundamental roots in healthcare and in jet engines, with a sprinkling of a few other businesses on the side. And it's just this greater confidence in cash flows and the future of the dividend that could push this stock past $20.
Okay.
So I added it to the focus list a few weeks back. I think it has bottomed already. It went below $13. It's around 15-ish today. It's a little bit up today on the transportation news. So I think it is a bit of a vote of confidence. It's a turnaround story. It's a restructuring story. If you're an earnings purist, if you're a Zacks rank purist, you probably will have trouble jumping into GE. Because
what is the Zacks rank now? Used to be a 5.
That's right. So it's a Zacks rank 3 now.
Okay.
But I suspect that over the coming quarters, there will be periods when the earnings releases would be less than pretty.
Yeah.
And it's also possible that as they keep getting out of the capital business, the GE capital, which they have really wound down, but it's still, it's hard to get out of finance. So there could be other restructuring charges or other headlines which may be problematic for the stock. So it is only good for folks who can hang on to it for 12, 18 months, who can tolerate negative headlines, potential negative headlines in the short run, and just have confidence that the cash flows, that the current management team, that the future of the dividend is safe. It's a 3+% yield right now.
Yeah, so that's still not bad.
It's still not bad.
No.
So I strongly feel that the jet engine business, the healthcare business, if they do decide to stick around in the Baker Hughes business, these are all solid businesses, the best in their classes. They just need to get out of the slower moving side businesses along the lines of the transportation they announced today, and that's the crux of the story. So as exciting as what you will be describing.
Right, Raytheon is the stock that I'm bringing. It's also a Zacks rank 3, but it's hard for these big caps, to get and maintain the 1s and the 2s. They kind of tend to fall back, but the analysts are all still really bullish and have been raising the estimates. The estimate growth on earnings is pretty crazy for these defense, these big cap defense guys. And Raytheon, another almost 30% earnings growth expected this year and another 15% next year. Now, I brought the estimates so you can kind of see what they're doing. Again, you can see the nice increase here for 2018, another increase for 2019. They have a great earnings track record of beating. I also brought that chart. As you can see, it's one of the better ones I always highlight on my earnings videos. And obviously they haven't missed, but they're just very consistent. Now you can see also that the shares are down off those highs here. And I think some people got a little nervous about the defense stocks in general after the North Korea summit. All of that was announced because they're playing on that there might not be peace. Peace is like seen as a negative for these stocks, even if it isn't going to be. But got a little bit of pullback here, and some insiders actually have decided to buy on this pullback, which I find to be interesting. They've been buying slowly over the last year, even on these new highs that the chart is showing. And then on this pullback, I had a director that just bought. So we bought it for the insider trader. Again, we owned it last year and took a nice gain because this is a kind of stock that just kind of grinds higher. You're not getting the 5%. Daily gains in it, but you turn around and then you see a chart like this. So all the fundamentals are still good with these defense contractors. I like the ones where the insiders are buying on those highs.
Absolutely.
That's a little different. And I did take a look to see if any insiders were buying GE because, when it's beaten down that badly, you think maybe this is a buying opportunity and that they would be getting in. And a bunch did buy last November, and then a senior vice president bought in January of this year. There haven't been any other buys since then, but as people know that the window isn't always open.
That's right.
And as you just described with all these changes that they're doing and they're spinning off divisions and all of that, there'd be way too much going on for the window to be open for the insiders, because if they have the inside information, they know, for instance, this WabTech deal, that window for them to buy is not going to be open. So I have a feeling they're under, basically right now, kind of a permanent lockdown on buying. So people shouldn't read too much into, like, they didn't get in on the lows. But the fact that someone bought in January when the shares were around $16, and then they bought last year when the shares were around $18.
That's positive.
Said that, that they are seeing that there's some opportunity there. And it wasn't all just the CEO either. You know how when the CEOs just kind of go in there. So I do find that to be encouraging, and it's something that people should be kind of keeping an eye on.
Yeah,
as well.
I agree.
But what do you think about the big caps in general now that the small caps are kind of in the spotlight? Should people still be getting into the big caps?
I think they should. The small cap gain, I read a nice article in the Journal over the weekend. They were describing that the S&P has been dragged down by weakness in a few larger names. The rank and file companies are doing fine. There's obviously the trade questions. There's the question about the dollar strength, which the large caps are more exposed to than the small caps are. But at the end of the day, the global economy is doing good. Business for all of these companies is pretty strong. And if some of these high flyers have pulled back a bit, I think that's a good buying opportunity. Well, we always bring you the top stock picks here every week, so be sure to check out our videos. They're always on Zacks.com, and you can find them on YouTube. And we'll be back again next week with some more stocks.